So, hey, David. Hey, Rocco. Solomon, how are you today? Looks like, okay, excellent. We are now up and live on YouTube. I'm going to start the recording and away we go. Okay, good day, everybody. This is Dennis Wilborn with the Active Trend Traders. I want to welcome you to the session on how to make money trading stocks. This is our weekly live stream via YouTube, and also we cover webinars for other members in active trend trading. Whichever way you're joining us, welcome. If you are joining us via the live stream, just be aware there's a slight delay with live stream, but that you will be, in fact, it will catch up. I've got to change one thing here, switch accounts. Oops. Let's see here. I still got to switch accounts here so I can be able to see what's going on. There we go. So anyway, if you are joining us via the YouTube channel, if you're not a subscriber, please just hit the little red button there to subscribe. And now let's get down to business. Hope everybody's having a great week. Isn't it just absolutely so much fun to watch the market kind of melt down? Although we're in the time of year where we'd expect that to happen. So a reminder that all the materials we do provide are for trading purposes only. Traders should always paper trade any new method prior to the risk of their own personal capital. Past performance is not an indication or a promise of future performance. With active trend trading, what I try to do is I want to keep us focused on the process. Focus on the process, and the profits will follow. If you've been trading for a while, you know that we can get so wrapped up in the money side of it that we basically lose sight of the process. And the process, basically what I call the system, is what gets us into trades, out of trades. It's the discipline. I had too many friends who have traded strategies, option strategies, traded stock strategies, trade future strategies. But because their strategies aren't built on top of the foundation of a really strong system, they tend to blow up their accounts. And it really hurt me a lot when I saw one of my really good friends take a six-figure loss following one of the companies that's out there selling advice. Basically said, hey, I'm going to introduce you to a high probability type of trading. And because when I took a look at it, I said, yeah, the only high probability that you got going on there is a high probability you're going to lose money. But he gives me a call and says, hey, Dennis, how do I get myself out of this now that I'm into this trade? I said, well, Jim, to hide the identity of the person, I said, Jim, you got to cut your losses. I mean, if you're down below a certain level, you got to cut your losses. And by that time, at that time, he was only down 5 figures. And he said, no, I'm going to let it ride out through earnings and see how it turns out. Well, he wrote it through earnings. He rolled the dice, and the dice wound up costing him 6 figures, which just, absolutely, that hurts. And when I see a friend go through that, it really pains me. And so that's one of the reasons why we do the premium level of active trend trading, is hopefully to help people avoid those kind of circumstances and those kind of situations. So, whoa, bull trap. Is that what we are currently experiencing? I know a lot of people wanted to get long this market when it bounced up, and we still may want to get long. We're going to take a look at the charts here momentarily, but just keep in mind that August and September tend to be very weak months in the year. Matter of fact, September is typically, historically, the worst performing month of the year compared to the other year, compared to the other months of the year. So we'll keep our eye open on that. I'll take a little bit about stock and ETF performance. If we see if we have any bonus setups right now with the market selling off the way it is, we really don't have a bonus setup, and that's okay because holding cash is a position also. Here's where we're sitting, basically, with the market. We're going to jump into the indexes really quick. Active trend today, we're up about 23%. The indexes, as you can see, they're coming off their high. And the NASDAQ Composite, they're dropping back down below the 20% for the year range. Every one of the indexes are down. This is taken up 9 o'clock this morning, are down for the from last year's high. They're down from last year's high. So let's go to the chart. Hey, just a quick reminder. If you're not a active trend trading member, but would like to get access to, my elite list. Now it's not my private list, but my elite list that I search out every weekend to develop. This is one of them. It shows the stocks that were, basically strongest and highest institutional interest on stocks. I have 2 elite lists that I put out. We'll highlight typically between 10 to 15 stocks. Get signed up for the free newsletter at Active Trend Trading. So let's see. Let's go back. Let's take a look. Let's run over to the charts real quick. And Steve, I'm going to take you off mute. So Steve, what are you seeing with this market right now as I'm switching over to the charts?
Dennis, can you hear me?
Yeah, we can hear you fine.
Okay. Well, I agree with much what you said. We've got a strong pullback today. Very few things are setting up. I see no setups for today. And I've exited most of my open positions various times today.
Okay, so you're basically almost in cash?
Pretty much almost in cash, yes.
Okay.
I've got 2 positions open out of 8 that I had.
Okay. Hey, what was the stock that you covered last week?
NMIH, and it was an exit today.
NMIH?
NMIH, yes.
Okay, that's November Mike India Hotel, yes?
Correct.
Hey, let's take a real quick look over here. And if I recollect from last week, what Steve was looking at is he was looking at a nice pullback.
Yeah, it was a pullback to the trend line. And I had entered on Friday last week, and I held through the pullback earlier in the week. But with today's action price action is what I call Wyckoff would call an upthrust bar. And it signals to me weakness or selling coming back into the market. So I decided to exit with a small profit on the position. Okay, well, that's excellent. Yeah. And to get you so Steve got in basically here was, let's see, let me go backwards. Here was last Friday. You entered about here, right? Hang on, I gotta move. I have to move my chart. I had entered near the open on Friday. Yeah. So Friday last week, so you entered about there, yes. $27 and 30 cents or so. Okay, that's what I have right there, about quarter. And then you got a little bit of bounce down. It held the 8-day moving average, bounced up today. Right. And then on today's reversal price action, we've traded to new highs and then pulling back very sharply. Yep. I decided to exit the position. The market looks so ugly right now with today's action, so I decided to start exiting positions if there were any reason to close them. Yep. And this is very interesting, and I hope that everybody can appreciate this. What we have going on is from I'm a candlestick kind of guy, and what I'm seeing here, Steve, is if we close where we currently are with this daily chart right here. Correct. What we'll have is a shooting star. Correct. Which is an inverted hammer. Join that up with a bearish harami. The small body of today is inside the big body of yesterday. Correct. And so that's typically a typical candlestick reversal pattern.
And so the anticipated move would be to move on down at least into the moving averages.
Yeah.
One of the things, are you watching this, Steve, for if we, oftentimes what we'll see is we'll see a move up like this. Let me get my drawing tool.
Into resistance?
Yeah, a lot of times we'll see a move up like this that breaks this trend line because the trend line has been broken. Draw another little trend line in here. And then we can anticipate a pullback into the trend line.
Correct.
To kiss the trend line goodbye and then spring load from there.
Yeah, and I would be looking for a re-entry should that occur.
Okay, that's awesome. Yeah, that makes sense to me, and that would be around. A couple of things you can do is you can throw on a Fibonacci here from this low here up to this high, going a fib, and look at that, the 382 retracement takes us right back down into the 8 and 20 day moving average. Right. A 50% retracement takes you back down into past support of about 2665. And then a 618 retracement takes you back to 2611.
Mm-hmm. So all beautiful places to keep an eye out for a potential re-entry.
I agree wholeheartedly. I agree wholeheartedly. Let me get rid of this. Now, one of the things to just keep your eye out for, though, because if the market does continue to weaken,
correct.
And I'll throw this on the daily chart. Let's throw this on the daily chart, Steve. Okay. I want to go out one. And I'll throw, okay, here we are. So it's what we can basically call a two-step pattern, which if the market is going to continue weakening, we could basically, you take your Fibonacci, go to the highest point, which is about right there. This works going the other way also, but we'll go there, go down to our low there, back to our reversal candle there. And that gives us some additional downside targets if we fail here.
That's right.
And so the 786, the 100%, this 100% move down here would be basically a symmetric move of this from here to here would be take you down to about 2188. And you could have a target all the way down to 20. So how do you want to trade something like that? I suggest go ahead and put in alerts there if you're following this particular stock, because this stock is looking stronger than the rest of the market. So cool. Thanks, Steve.
You're very welcome. Thank you.
And that was a good analysis. I hope you guys appreciate it and enjoy. Steve's a really great guy. He's a professor out at University of Hawaii. He is also an excellent technical analyst. And since we've moved back to Hawaii, I'm really enjoying getting to know Steve a lot better because we kind of look at the market the same way. But we trade slightly different, but then slightly the same too. So thanks, man. And okay, let's take a look at the the SPYs. Okay, the way I'm looking at the SPYs right now, folks, I'm looking at the daily on the right, the weekly on the left. The SPYs did exactly what we thought that, well, they did. We had two options of what the SPYs were going to do. The SPYs were going to basically break up here, break through the moving averages and continue on up, or they were going to hit this resistance, which is what they did, and start to pull back down. And that's exactly what they're currently doing. Now, we will have another retest coming up here shortly down here at this green zone. Now, this is, and so that's down there about the 282 level. Keep an eye on that. This, and I had mentioned this in some of my other earlier recordings, is that with the TSI on the weekly chart and the market forecast on the weekly chart pointing down, they tend to be stronger signals than the daily TSI and daily market forecast. And so we can push on down from there. The question that'll be in everybody's mind, probably going into this weekend, is this a bear flag? In other words, this drop from here would be the one flagpole. This moves sideways to be the flag. And then if we break out the bottom, our expected move would be all the way down here to the around 270 level. We can do the same thing on the spiders that we did on the that stock that Steve showed to us. And so I'll go up here, I'll grab that high, I hope. Nope. It's one thing when you're using the Thinkorswim platform, if you have it where it supposedly grabs the high. There we go. Sometimes it does and sometimes it doesn't. There we go. So now here, and this is a great way for figuring projected downside moves based on a flag like this, because this is exactly what we're getting here. The drop down to the bottom of the flag, up to the top of the flag. The flagpole could go 100%, which takes us down to 273.89, or it could go even longer to about 268.31. So those are target areas to the downside on the SPY. The SPY is not ready to buy as of yet, especially if we get this large, this big bearish candle today. We'll just hang out and do nothing. Qs. Come on. Qs become interesting, and I'll just highlight a couple of areas. They become interesting down around the 181.38 to 188.50, 181.50, down to about 179.17, 117.20. Be aware, the 200-day moving average is slightly below that, and so that could give us a bounce up from there, and that still has to get through that. If it fails, if the 200-day moving average line fails, which corresponds approximately to the 40-week moving average over here. If that fails, then look for continued downside. Remember what happened last year. There may be some symmetry this year to what happened last year. Last year, the market went into just almost free fall in the September-October timeframe and then bounced up from there. Had a really nice move right back up into the moving averages here on IWM, rolled over, broke to the downside, and now we're entering its zone of support. Will it hold? That is the big question. If it doesn't hold, then you can do a real quick projection down from about 146 to 145. Let's take about $13 off of that. So $13 off of 145 would put us down what? Down at the 132 level? Does that sound about right? And that's where we could, that might be a really great place to get a bounce and turn around. Again, if you're setting up yourself up going into next week, over the weekend, just take a look at these and say, okay, I'm going to start planting my alerts. So that, and journal and put in your journal what the alerts stand for. Because I know like for me, if I don't journal it, I forget it, and so that I'll know, oh, I hit, like in this case, I hit 140.92. Here's the action I was planning at that level. And that way it's a lot easier because you're making your decision up before you go in, before the market's really live. And so it's not an emotional decision. I just want to share a couple of other entities with you. I want to take a look at GLD. This is the gold ETF. And as you can see, as the market craps out, gold is in the process of rallying. We did not even get close to getting our pullback back here to the 131 level. I'll be taking a look at gold over the weekend, providing that the analysis for our premium members at that time. The other thing we'll take a look at is oil, and I use USO. USO. Oil may very well be, with Chairman Powell's discussion today about the global economy going downhill. Oil may, in fact, tank here. Oil is in a intermediate weekly downtrend. It's also being shown the reaction on the daily charts. So those are a couple of things I'm looking at. And somebody gave me a. Oh, okay. Yeah, Steve. I'm sorry. So you put in the questions. No problem. Let's run over here and run through the rest of the charts. And that is the rest of the charts. So I'll just run through the rest of what we're doing here. Hey, here's where we're going right now with the strategic compounding process. I'm going to continue to come back and hit on this. I'm really pleased with how this strategy is working out for the year so far. Our objective, of course, is to take a small account, grow it into a larger account. You'll understand more about this as we continue through the end of the year. And I'm looking at doing some webinars, free webinars actually, going into the end of September. That's going to be covering the concept of strategic compounding. Our earning trades for the month so far are going kind of okay, not as well as last month's, and so we're down a little bit in earning trades. We're waiting for some trades to come through this week. We're open right now on VMware and Salesforce. We did one iron condor spread that worked out for a nice profit, and then I would be saying I was flat on strategy one this week, which is buying stocks and ETFs. However, we did put in a order to buy Adobe for a pre-earning run. But here's what our premium members expect. You get an alert, a text alert and an email alert that says, defines the trade. This is one we did on LABU earlier in the year. We took it and it shows us where we take profit, where the stop loss is. And so it helps people go ahead and put in their orders if they're going to parallel trade with us. Lastly, if you are a like to invite you to join us in the Active Trend Trading members member. You can do so right now. Save 20% by doing a quarterly membership. And so anyway. So NASDAQ's moving kind of sideways. NASDAQ can go to sleep along with the Russell through the September timeframe, tends to wake up in the October timeframe. So you're going to see a lot of news and noise this weekend saying, oh, this drop in the market is due to President Trump and all his tweets and the Chinese and all that kind of stuff. Remember, it's kind of a natural thing for this time of year to be very volatile. And so just be aware of that. And then finally, rut seasonality, as you can see, September, October, then tends to get a big move. Be aware the Russell tends to rally more at the end of the year than the other two entities. Nat Gas, I'm looking for an opening in Nat Gas. And lastly, if you're premium members, I'm going to be doing more live market trade rooms. We're going to do one on Monday and one on Friday, in addition to the one we already do on Friday. On Monday, we'll follow that one up. So with a live weekly prep so we can get our orders placed. So if you're not a premium member, this is a new added benefit that is going on with the premium members. Then BAM meeting in September. And I will be doing this, I said, this invitation only webinar. And I'm looking at doing that the last week in September in order to help people get ready for the year-end run so that you can basically multiply your results into the year. Here's the team, myself, Brandon, and our families. It's Michelle, Sharon, our daughter-in-law, and our 2 grandkids. So until next time, hey, keep the egg growing. I'll be joining some of you at the top of the hour for the premium session. And until next week, aloha, trade well and prosper. Have a great week. I want to say thank you to Steve. Steve, thank you for jumping on board with us today. It was awesome. You brought a lot of I love it when you can come and talk specifically about a stock. And I know that you've looked into it and done excellent analysis on it. So thank you. Mahalo, my friend. So, okay, with that, good day, everybody. Aloha.